But there is a space, and I think a lot of investors tend to ignore small caps. And there is a space probably for about 5 to 15% of a portfolio where it can make a big difference. If you have a year like we had last year, or the year before, even a 10% allocation in your portfolio could really drive your returns from, high single digits into the double digits.
Well, if you won't say it, I will. Your year last year was nearly 60% returns. Is that right?
Yes.
So that trounces large caps. It trounces the small cap index. I want to know how it's doing in 2025 because this is kind of a rough year.
Yeah, and I think to put it in context, let's start with last year and then we'll come to this year. So last year we had the TSX up, I think 20-ish%. Bank stocks were up 25%. The NASDAQ was up, I think 30%. So last year you could have really done anything and made money. And the way that our fund's positioned is in the good years, we should do much better than the market. And that's what you saw last year. And then in a year like this year, where the markets have been shaky, our investors don't expect us to be up in a down year. For that, they'll use things like market neutral, they'll use different strategies. So for us, obviously, when the markets are down, we're going to be down. Sometimes we'll be down more than the market. And that's a risk that we accept in order to get the upside. You're getting enhanced volatility both ways.